Good evening, friends. I'm Pooja Gandhi from Kirin Advisors. Welcome you all for the virtual analyst and brokers meet of Indel Money Limited. Indel Money Limited is a non-banking financial company regulated by the Reserve Bank of India. The company has its corporate office in Kochi and operates 268 branches. The company provides various financial services which is spread across multiple industries. So joining us today Mr. Umesh Mohanan, Executive Whole-Time Director, Indel Money Limited. Welcome, sir.
Thank you.
Uh, Mr. Vivek Vaishnav, Director, Vivro Financial Services. Welcome, sir.
Thank you.
Now I request Mr. Vivek ji to give a short brief of the company. Over to you, sir.
Yes, thank you, Pooja. Welcome everyone for this conference of Indel Money Limited. My name is Vivek Vaishnav. I'm the Director of Vivro Financial Services Private Limited. We are the lead managers to the current NCD offer of Indel Money Limited. A little background about the company. Indel Money Limited is a RBI registered NBFC, a middle layer NBFC. With the company's main business predominantly is in the lending of money against household gold jewelry, basically gold loans. The company is it has always been in south, but now it has been moving onwards further. It has been with large presence right now in Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, Odisha, Maharashtra, Telangana, and now further moving to further states as the company progresses. Today, we have Mr. Umesh Mohanan, who is the ED and CEO of the company, and the company is currently launching. It has already launched its NCD offer today. To give us a better understanding about the company, I would invite Mr. Umesh Mohanan to give a presentation about the company and take us through the journey of the company. Thank you, and on to you, Mr. Umesh Mohanan.
Good evening, gentlemen. I really thank you and welcome you all to this webinar. And thank you once again for making this webinar on the basis of our invitation. We, as all mentioned, we are a non-banking finance company, which is under the Reserve Bank of India license, and our predominant activity is gold loan. And we do the same thing what the other gold loan companies does, but we keep our uniqueness in doing the same things in a very different manner. And our uniqueness is spread across in terms of the product design, which has been designed revolving around the customer, and the culture what we maintain in terms of the customer treatment and how the product has been taken care of. And the thirdly is our branch placement, the techniques of branch placement and using of digital hybrid platforms, which is one of its kind for this nation. And without taking much of your time, I would like to run through the corporate presentation. So, just taking you to the rise of Indel was actually started by my granddad. In was started by my granddad, and he was the one who ventured into the finance business in the early '80s. And he was the first pilot of Bharat Airways, which erstwhile was being formed as Indian Airlines, and later that he joined Tata Tea as their Assam Valley head, and then he moved to the Middle East as a commercial director of a large oil and gas conglomerate. Then he returned back to his hometown, which is a small town called Palakkad in Kerala, which is to the borders to Coimbatore. And he had returned back to take care of his family business affairs, which was including plantations and agriculture. And it was to his discovery and understanding of the last mile financial disconnect which made him venture into the finance business during that time. And basically, it started as wage discounting for our own domestic class of laborers, and that went all along till the early 2000s. And 2010, after he passing away, me and my father who's currently the chairman managing director of the organization, decided we would like to stress and venture into the finance business. And for that reason, we took up an NBFC license under the Reserve Bank of India. Speaking about my father, he is a 37 years experienced banker himself, and he has been serving as trade finance head for international banks in the Middle East. and I come from an investment banking background. Again, spending nearly 2 decades in international arena. So in 2013, we pushed into the gold loan business as the first diversification of our first venture under the NBFC license issued by the Reserve Bank of India. It was very simple. The reason why we went into the gold loan that time, it's because the market was suffering, and all of the gold loan companies took a hit during that time. So we had a lot of learning from the mistakes what the predecessors have done, and we found an opportunity in the market to enter. So in 2015, we had our first CRISIL rating. We are still being rated by CRISIL, and we entered into the markets of Tamil Nadu. In 2016, we were upgraded by CRISIL to triple B minus. In 2018, we entered into the Karnataka market. In 2019, we entered into Andhra Pradesh and Telangana market. And 2020, we launched our doorstep gold loan as a pilot project in Bangalore and later in Hyderabad. 2021, we did our first public issue with 125% subscription. We were upgraded by CRISIL that particular year to triple B, and we entered into the state of Odisha. In 2022, we launched our digital personal loan platform, which is a complete digital product. We also launched our hybrid gold loan platform, which is first of its kind. And we did our second public issue of NCD, which was subscribed by 162%. And the same year, we got upgraded by CRISIL to triple B plus, and we expanded into the state of Maharashtra too. 2023, we did our third public issue where our subscription was 174%. And that same year, we entered into Madhya Pradesh, Delhi NCR, and UP through Noida. In the same year, we were awarded the AD2 license by the Reserve Bank of India. We are the second NBFC in India to get a straight AD2 license. Now, taking you through the investor presentation in detail, taking you through our key strength, we've got 1,200 plus of staff. We are a digitally driven banking systems company. We've got a high capital adequacy ratio of 25.43, a low in leverage. We've been rated by CRISIL as triple B plus. We've got a doorstep lending platform, which includes our hybrid gold loan platform too. Now, getting in more detail about the management team, we've got Jijit Raj, who's got 18 years of plus experience in the BFSI sector, has been working with institutions like HSBC, Yes Bank, Reliance Capital, and he was previously the national head of FedFina, which is the NBFC subsidiary of Federal Bank. We've got Sudesh PR, who's our head of strategy and operations. He's got another 19 years plus of experience in the BFSI sector. He has served in institutions like Tata AIG and Muthoot FinCorp. We've got Sri Kumar A, our head of risk and credit, who is an ex-DGM of State Bank of India. We've got Venugopal MB, who is our head of internal audit, who is the ex-internal audit head for Federal Bank, also the ex-internal audit for their NBFC subsidiary called FedFina. We've got Hannah P. Nazar, who has got her 9 years plus of experience in the BFSI sector, whose last stint was with Muthoot Capital. Narayan Pusharat, our head of finance, who's got 25 years plus of experience in different arenas like automotive, distribution, manufacturing, and the BFSI sector. We've got Matthew Kemani, who's a head of HR and admin. He's got a 20 years plus of experience in the BFSI sector. His last stint was as the HR head of Manappuram. We've got Prasad Chemban, who is our head of third party vertical, who's got 20 years plus of BFSI experience. And his last stint was as the head of third party vertical for Muthoot FinCorp. Now, giving an introduction on the board of directors, we've got Mohanan Gopalakrishnan, who is our chairman and managing director. He's a banker by himself by profession. He's a 37 years experienced banker, and he has been serving international banks as his trade finance head in the Middle East. We've got NS Venkatesh, our independent director, who is also to the chairman to the audit committee. He is a chartered accountant by qualification, and he's currently serving as a CEO of AMFI, Association of Mutual Fund of India, and he's the ex-ED of IDBI Bank. Then we've got TR Anantaraman, who's also a director and chairman of Finance and ALCO Committee. He's a chartered accountant by profession, and he is a practicing chartered accountant himself. He's a partner to the CA firm Sengotian and Company. And we've got Salil Venu, who's our director. He's who is our administrative director with an experience of more than 20 years. We've got CR Shashikumar, our independent director, also a member of audit committee, who's the ex-managing director of State Bank of India. We've got S. Ganesh, who is also our independent director. He's a former principal general manager of Reserve Bank of India. and the ex-RBI nominee to the Director Board of Corporation Bank and UCO Bank. And we've got Umesh Mohan and myself, who is serving as Executive Director and CEO. I'm an investment professional with more than 2 decades of experience in different verticals of investments in the international area. We've got Kavita Menon, who is our Women Director, who's responsible for the learning and development of the company. Now, taking you through the journey, we have FY 2018-19, we were at 230 crores, 135 branches, and only operating in Kerala, Tamil Nadu, Karnataka. In H1 of 2023-24, an audited figure, we had an on-book balance sheet of 817 crores and an off-book of approximately around 580 crores, something, making it around 1,340 crores. 250 branches and 1,200 plus employees, and covering Kerala, Tamil Nadu, Pondicherry, Karnataka, Andhra Pradesh, Telangana, Orissa, and Maharashtra. And by YTD of FY24 December 31st, we have touched an on-book and off-book balance sheet cumulative size of 1,410 crores, and adding Madhya Pradesh, Delhi, and Uttar Pradesh to the region. To give you a gist on the financial performance, as an AUM, FY22 we have recorded, FY23 we have recorded 648 crores, and FY24 of H1 audited we have an on-book balance sheet of 817 crores, and as of YTD FY24 December 31st, we have an on-book and off-book together of 1,410 crores. The total debt of FY23 is 807 crores, and H1 FY24 is 876 crores. The interest income of FY23 is 185 crores, and H1 FY24 is 141 crores. The net profit after tax, we closed FY23 at 21 crores, H1 FY24 we are closing at 29 crores, and our PBT for YTD FY24 as on December 31st is 50 crores. Net interest income is 100 crores for FY23, and FY24 H1 is 89 crores. The CRAR percentage is 25.34% on FY23, and H1 FY24 we are at 25.43%. The stage 3 loans were at 2.98%, and H1 FY24 we are at 5.62%. Stage 3 loans, net stage 3 loans are 2.61% on FY23 and 4.79% as on FY24. In terms of capital adequacy, we have got a Tier 1 capital of 201 crores and a Tier 2 capital of 100.74 crores, where our capital adequacy ratio is 25.43%. Taking a gist of the business summary, we have closed our H1 FY24 at 1,362 crores, out of which 817 crores are on-book portfolio, and out of the 1,362 crores as on H1 FY24, we have 1,216 crores of gold portfolio, and the MSME at 5.02, business loan at 55 crores, privileged personal loan at 85 crores, and the other loans at 57 lakhs. And currently, the total AUM figure at YTD as on December 31st stands at 1,410 crores. We had a new customer acquisition of 26,720 customers till the H1 of FY24. By YTD as on December 31st of FY24, we have brought it up to 47,000 customers. In terms of branch productivity, FY23, we have an average branch productivity of 4.6 crores per branch. In terms of AUM size, as of September FY24, we have a size of 5.32. As of YTD December FY24, we have reached around 6 crores. We have launched 15 numbers till H1, and after that we have launched another 37 numbers. So our consistent growth in average AUM numbers is quite testimonial to the fact that the branches, not only the existing branches, even the new branches start sweating very early. In terms of portfolio composition and distribution, we've got a gold loan portfolio of 89.3%, the MSME portfolio of 0.4%, the business loan at 4.1%, the privilege loan at 6.2%. In terms of geographical distribution of gold loan portfolio, as on H1, Tamil Nadu stands at 31.62. As of YTD, as on December 31st, it stands at 28%. Karnataka stands 26.45% as on H1 audited, and as of YTD December 31st, it stands at 27%. Andhra Telangana at 17.95 at H1. It stands at 19% as on YTD December. Odisha at 15.89% as on H1. As on YTD December, it stands at 18%. Kerala is 3.94% as H1. It stands at YTD December as 3.5%. Maharashtra at 4.16%, and as of YTD December, it stands at 6%. And later that Q3 quarter, we have added more geographical areas too. In terms of loan disbursement trend, we as on H1 we have disbursed around 1,597.99 crores, and as you can see, FY23 we have disbursed 2,436.54 crores. As on YTD December 31st, we have already disbursed around 2,246 crores, which is basically around 97% of last year's disbursement by this Q3 end. And out of all of our disbursement, 94% of disbursement goes to the gold loan, which specifies to the fact that we are a more gold loan focused company. In terms of our position in India, we are 262 branches currently operating, and expansions having in newer geography and expanding within the geographies we are present in. We have just entered into Delhi and Madhya Pradesh and into Uttar Pradesh through Noida. And we would be adding Gujarat and Andaman Nicobar in this quarter itself. And apart from that, we have first quarter of plans of entering into the states of West Bengal and Rajasthan. We are in the becoming of a pan-India player. We are rather, moreover, touching the pan-India playership. In terms of financial associations, we have different verticals, like we have term loans, cash credits, direct assignments, commercial papers, working capital demand loan, co-lending, institutional NCDs, MLDs, and our largest financing partner is State Bank of India. In terms of expanding our achievements in terms of awards and accolades, we've been awarded as the top 50 BFSI Great Place to Work in India by the Great Place to Work certification agency, and we have been certified as Great Place to Work 3 years in a row consecutively. We have been awarded as the fastest growing NBFC by the BFSI Summit, and we have been awarded as the Brand of the Year by Outlook Business. We've been awarded as the Impactful CEO by ET Now, and we've been awarded as by Asokam as the runner-up for the best debt instrument issuer. Now, speaking more on the fourth NCD public issue, I always would like to bring to the attention of the people that everybody would be quite upbeat on the equity part of investments. Equity has got its own upsides and corresponding downsides too. There's a lot of volatility, but the probability of making more money is there. Similar downside is also there. I always advise people that to hedge the basket. And if you got 100 rupees, at least I suggest 10 rupees or 20 rupees to be kept in fixed coupon bonds, fixed coupon secured bonds to be very precise. And I believe the secured NCDs issued by NBFCs is one of the secured coupons. And on over and above that, the secured NCDs issued by gold loan companies are regarded to be the best secured, because when a secured NCD is being issued, the underlying asset is their loan book, and for a gold loan company, the gold loan book is their asset. And this particular loan is a process where the disbursement takes place as the jewelry is kept in the custody of the institution. So basically, it's like the investor investing directly on the gold bond, where he does not get exposed to the advantage or disadvantage of the gold volatility of price movement, but whereas he invests on a safe asset in return for a fixed coupon return. So that makes his investment more safer. So I would like to take you through the NCD. Our lead banker is Vivero. Our debenture trustee is Catalyst. Our registrar is Lincoln Time. Our legal is Kaitan and Company. The statutory auditor is Butter and Company. The listing is done at the BSE. Credit rating is done by CRISIL Ratings, and sponsor bank is HDFC. Our issue size is 200 crore with the base size of 100 crore and a green shoe of another 100 crore. The coupon face value is 1,000 rupees. The minimum lot size is 10 NCDs, and tenure is 366 days to 72 months. And the coupon rate range is between 9 to 11.5%. The effective yield is between 9% to 12.25. Issue open date is on January 30th, which is today, and issue close date is on February 12th. So get you the key highlights. The key highlights is doubling your investments in 72 months with a cumulative return of 12.25% per annum, giving an effective yield, and an attractive monthly coupon of 60 months of 11.5% per annum. Taking you in detail on the coupons. So the coupon rate of a 366 days monthly payout is 9%, giving an effective annual yield of 9.38%. 300 24 months monthly gives a coupon rate of 9.75 percentage with an effective annual yield of 10.2 percentage. 36 months monthly coupon rate at 10.7 percentage and an annual yield of 11.3 percentage. 60 months monthly coupon rate at 11.5 percentage and an annual yield of 12.13 percentage. 72 months with a cumulative structure of 12.25 percentage, which is basically doubling your investments in 72 months. Now, why invest in Indel Money? We've got a trusted, repeated customer clientele of 1 lakh plus, where we have added another 30,000 more in this quarter. And we've got 90% share of our portfolio in gold loan. We've got 1,300 plus of committed employees in the workforce. We've got 260 plus branches across Pan India. And Indel is focused on growing customer segments and highly secured portfolio with gold loans constituting 90% of its book size. Healthy NPA levels as the loans are secured against loans kept in Indel's custody and easily liquidable in the event of a default. And we are India's fastest growing gold loan NBFC with a 211% growth in profit over last 2 financial years. We are expanding geographical footprint with entering into thriving markets and driving financial inclusion agenda. Since we are more focused on the tier 2 and tier 3 centers, we support that agenda. Robust governance and risk management frameworks making our portfolio quality 90-day DPD one of the best in the industry. Thank you very much, and I look forward to questions.
Thank you, sir. Now, I request all the participants to please post your questions in the comment box. So first question is from Deepika Chadda. Hello, sir. Can you provide insights into the core business model and what sets you apart from other financial institutions?
So the first thing is our product itself. So our product basically comes into the market with the minimum of a 1 year scheme where the market has been dominated by 3 months, 6 months, and 9 months. So our scheme starts from 1 year and goes all the way 18 months, 24 months to 36 months. Because it's quite simple that anybody comes in for pledging their particular ornament comes with the mindset of pledging for 20 days or 30 days or 45 days. But what we tell them is that you go into a 1 year scheme and you want to release the pledge in 10 days, 15, 20, 30 days, whatever it is, just pay the interest for the number of days utilized. There's no pre-closure charges or there's no hidden charges. And what happens in turn is that if in case the customer fails to release the gold in the specified time according to his wish list, he will be able to retain it for a year in our 1 year scheme by just paying interest across, or he'll be able to retain it for 2 years in our 2 year scheme. So it's like a fallback mechanism for him to give him an opportunity to retain back his gold. So that's one of the design what we have done in the product. So ultimately, what we have aimed is that the probability of a customer losing his ornament in auction with us is far, far lesser than the probability of a customer losing his ornament in auction with our competitor. So basically, over and above all these things, we do a hand-holding exercise and educate the customer on the pros of remitting monthly interest. Whereas, as you might be aware, the gold loan industry, as per the RBI, gives a demand loan where actually the bullet payment of principal and interest can be done at the end of the tenure. And most of our competitors actually promote the customers to do a bullet payment towards the end of the tenure so that they have a higher yield. So here we do a handhold exercise, and against the collection average of interest of 25% against monthly demand in this industry, we have a collection average of 75%. So basically, our ROI might be 100 pips less than our competitors, but we will have a long-term relationship with our customers, because once an auction done means is a customer lost. So rather than doing an auction, we would like to protect our customer and his sentimental valued ornament. So that's how the product design goes. And or then we have a cultural impact on it. We have local population being manned in our all our tier 2 and tier 3 branches, And it's basically an understanding that we have no happy customers walking in. So customers walk in with problems, we can create satisfied customers. We believe in human connect, and we believe in beaming empathy and hospitality towards these people. And since a sentimental valued asset is being entrusted with us, we need to have a lot of human connect. And we believe we are in a unique business where we need to earn the trust of both borrowers and lenders. So that's the uniqueness of a gold loan business, and that's what we are pushing in for. And the other uniqueness what we have is in terms of branch placement. We don't do carpet bombs like the other competitors. Whichever markets we go, we do our survey on a proper manner. We survey the market, we look into the population, we look into the income level of population, the gold loan size of the population, who are the largest players. And in terms of branch placement, we place our branches as close as possible to the largest players. That's our confidence. And we easily come up to the top three level of that particular market where we're present in. And the other reason why we don't have large number of branches, rather than the carpet bomb system like the earlier predecessors have been followed, because the gold loan business is not same as what it was being done 6 years or 7 years before. Now the business is in a totally different model, because even if the customer wants to come and deal transact in our branches, we are so much digitally advanced that he has to come only 2 times to the branch, where he has to deposit the gold, come once for depositing the gold and second time for retrieving the gold. And with our hybrid system, which is one of the unique systems we have put forward, a person can sit in his house and do a pledge from his house, and he can come to branch and release it, or he can do a vice versa by terms of coming and pledging in a branch and sitting in his house and releasing it. So that's the hybrid gold loan system also what we provide. So all these things makes our uniqueness, and this is our confidence that we will be able to gain on the market, and that's a testimonial for our growth in the short span.
Move on to next question from Cogent Finvest. Can you share your geographic wise branch breakup across India?
So we are spread in Kerala, Karnataka, and Tamil Nadu, Andhra Pradesh, Telangana, making Tamil Nadu and Karnataka our market leaders. And second to it comes Orissa and Telangana, and then comes Andhra Pradesh. Then we've got Maharashtra, which is a newer geography for us, which has been just 6 to 7, 8 months old. It's been gaining so much of traction that it has already reached around 7% of our loan portfolio. And just last December, we added Madhya Pradesh, and we just added along with that Delhi operations with 15 branches. And we also entered into UP through Noida. We will be spreading in UP also across. And in this quarter, we would be getting into the newer geographies like Gujarat and Andaman Nicobar Islands. So the branch works are already undergoing. We would be opening the branches by end of February, and we would be getting into the newer geography of Rajasthan and West Bengal during the first quarter of the next financial year. Apart from these geographical expansions, there is expansions happening within the states where we have already entered into.
Move on to next question from Ananya Swaminathan. Hi, sir. What is the experience and track record of the management team, especially in managing debt, obligations, and financial strategies?
So I had given a detailed explanation on the management team, which actually shows that there is a core experienced people from the BFSI sector, with everybody having a decade plus of experience. And on top of that, our director board is the most unique director board what we have, where we have less of representation from the stakeholders and more of directors from the independent nature. And these independent nature directors are directors of stature and proper governance background.
Move on to next question
Yeah.
from Anandi Mittal. What is the portion of gold loan, consumer durable loan, and MSME loan in your total loan portfolio?
So 90% of our total loan portfolio is gold loan, and we don't have much of consumer durable loan. It is quite negligible. The MSME loan is around 4% for us.
Okay. Move on to next question from Gaurav Mehta. How does the company cater to a diverse range of clients, including high net worth individuals, business institutions, and the common man?
So we have different schemes ranging from 9.5% all the way up to 18 to 19%. And we leave the options to the consumer as per their need and requirements. We keep the schemes quite flexible. So that's the reason why we have made such a range of schemes. And particularly in order to serve the high net worth individuals, we have bought the hybrid platform. And again, there is a story behind the hybrid platform. We were quite focused on the online gold loan aspect. So basically, it's a tradition aspect that the online gold loan used to be considered as a different vertical. So we launched it as a different vertical in Bangalore and Hyderabad, and we studied the costing very closely. We understood that the costing would not be viable because few of the balance sheets of largest of online companies is the testimonial itself. And secondly, we did a lot of survey amongst the customers in the tier 2 and tier 3 centers. They are not much for the online gold loan system because they would literally like to know where is the brick and mortar setup of the institution and where their gold would be resting in, and is their gold easily accessible for the customers for a release. So all these factors being taken together, we bought the hybrid gold loan system, which basically allows the class of people who would like to have that comfort. It's basically the HNIs who would like to have that comfort of either pledging sitting at their home or coming and releasing at the point of the branch whenever they require an emergency release, or they can do it in a vice versa manner. And on top of that, we have made the digital traction as much as possible, even for the common people, which is quite accessible and quite interface friendly. That they just have to come twice to the branch if they want to transact in a very common man manner, once to deposit and retrieve the gold, whereas all the payments, part payments, interest payments, and even top ups can happen through the apps and the web applications what we have.
Okay. Move on to next question from Deepika Chadda. What is the NPA ratio for the gold loan portfolio and how does it compare to industry benchmarks?
So our gold loan portfolio ratio is 1.4. The industry benchmark is 1.5.
Okay. Move on to next question from Bharati Agarwal. What is your market share in Kerala?
Our market share in Kerala is less than 3.5 percentage. I mean, less than 3.5% of our portfolio. We're quite minimalistic in Kerala. Although we're just corporate based out of Kerala, we have our expansions mainly in the pan India level and less inside Kerala right from the beginning itself. Although we started our operations out of Kerala.
Okay. Move on to next question from Rahul Jain. What is your lending rate on gold and MSME? Are they comparatively compared to your peers?
Our gold loan rates, as I repeated earlier, it starts from 9.5 percentage, goes all the way to 18.5 percentage, and we have got schemes competing with all the peers, including the banks. And the MSME rates start between 15 to 18 percentage, where our portfolio is comparatively very less.
Okay. Move on to next question from research. What are your future capex plans?
Our capex plan will be based on um, our expansion. So that's the only capex which is involved in the organization, and we have a digital enhancement which is in terms of software building and all these things. So we are building a software which is quite unique for us, and that's going to be the other major line share of the capex consumption on the coming up pattern.
Move on to next question from Vignesh Ahuja. What are your future growth strategies?
In terms of growth, we are quite focused on the tier 2 and tier 3 centers. Why we are more focused on tier 2, tier 3 centers? Because gold loan has become more of a like a lifestyle option, and it's no more a distress option. And when it become a lifestyle option, when you go to tier 2 and tier 3 centers, the gold loan is your third option or your fourth option or your second option. Whereas you go to tier 1 centers, gold loan becomes your 12th, 13th, or 14th option because there are ample number of other avenues of funding available for the people at the tier 1 cities. So we are more focused on the tier 2, tier 3 centers, and we believe India is one large place housing a lot of tier 2 and tier 3 centers. And with the amount of household gold reserves around 32,000 tons as of 2021, and with 15% of it in the gold loan pledge market, and out of the 15% of the gold loan pledge market, out of the whole pledge market, only 35% occupied by organized players and rest 65% by unorganized players. I feel there is a lot of headroom for us to grow in the tier 2 and tier 3 centers, and we'll be keenly focused on that. and we would be expanding into newer geographies. As I said, we are expanding within the geographies we have entered in, and we are also expanding our tentacles into newer geographies. And as I told you, our plan till the Q1 of FY25, our Q2 plan is to get into the northeastern states, expand in the northeastern states too, and to become a true, complete pan India player by the next financial year.
Next question is from Bumper Robert. What is your current loan book size and geographic spread?
So, in terms of current loan book size, we've got around 1,410 crores as on December 31st, which would be around 1,470 or 60 as on date. Uh, the current major portfolio contribution comes from Karnataka, Tamil Nadu, and Telangana, and Odisha catching up behind it.
One more question from Mr. Robert. And what is our average interest cost and NII?
Our average interest cost is sub 11, and our NIM is around 7 to 8%.
Okay. Next question is from Kojin. How we are competing with bigger players like Muthoot Finance, Manappuram, other NBFCs and banks?
So I did spill the beans of our uniqueness in the industry, and number one, as I said, the product design is our uniqueness. Number two is the culture what we follow, and number three is the branch placements along with the digital capabilities what we have. And we are quite agile and flexible with the size what we are in, and we are able to get the adaptation or the catch up with the evolution of the digital tech at the very faster pace. So we basically evolved as a hybrid gold loan company into more of a phygital, with more of a phygital technology with physical as well as digital altogether. So that's been our USP, and whichever markets we have entered into, although we are less in number of branches, whichever markets we have entered into, we have always made it to the top three position. So that's our uniqueness, and with our USP, that's our confidence of getting at the top.
Move on to next question from Anurag Shah. Who are your peers, competitors in the area of your presence?
Every gold loan company and every banks which is emphasizing on gold loan becomes our competitors, including the unorganized players.
Okay.
See, as I said, there is a huge headroom for every player to be playing in because, as I said, number one, the pledge market is growing as the household reserve is also going, and number two, there's a lot of headroom for organized players to grow too.
Okay. Move on to next question from Anandi Mittal. Usage of fund raised through NCD.
It is onward lending as we have got aggressive expansion plans. We would require the money from raised from the NCDs for our onward lending.
Okay. Next question is from Deepika Chadda. Can you provide details on the interest rate offered on the NCDs and the frequency of interest payments?
So we have got monthly schemes, we have got yearly schemes, we have got cumulative schemes, and the NCD rates I have shared earlier. So we have coupon ranges from 9 percentage monthly coupon payout to 11.5 percentage of monthly coupon payout, and we have a cumulative of 12.25 percentage of 72 months, which is basically doubling your investment. And the 11.5 monthly coupon payout is for a 60 months period, and the 9 percentage starts from 366 days. So it ranges at that range, and it is quite competent and attractive in terms of NCDs issued by the other gold loan companies.
Move on to next question from Asha Shah. What is the average loan size of ours and numbers of active customers?
So in terms of active customers, we have somewhere around 2 lakh plus, and in terms of repetitive customers, we have somewhere around 1.2 lakhs, 1.3 lakhs to be very precise. And our average ticket size ranges between 75,000 to 90,000.
Okay. Move on to next question From Prem Singhania, what type of security or collateral is being offered to debentures holders?
So we being a gold loan company, the underlying security for the secured non-convertible debentures, what we issue is our loan books, which is basically gold loan itself. And when I say gold loan, the uniqueness of the gold loan business is that when we lend, we have the security already in our possession. It's unlike like a housing finance company or a vehicle finance company. There is no securitization to be taking place in case of any default, since the asset is already in our possession. So in case of any default or worst case scenario, liquidating the particular asset is as good as cash. So I feel a secured NCD investment of a gold loan company is the best secured investment. And in comparison to the rates what we have provided, we have made it more attractive in terms of the all the gold loan company players in the market.
Move on to next question. From Ananya Swaminathan, how would you describe the current financial health and Indel Money Limited?
So Indel Money is quite aspiring and aggressive company in growth with adequate capitalization and adequate capital ratio, which has been maintained far above the levels required by the RBI, as RBI requirement is only capital adequacy ratio requirement is 15%, whereas we are maintaining around 25% plus, and our leverage is kept around 4x. And with the commitment from the holding company of not taking the leverage beyond 5x, so this is how healthy Indel Money is, and we are fastest growing NBFC, which has been awarded by the BFSI sector itself, which is a testimonial for the growth percentage fact in terms of the growth. And our bottom line is also growing at a faster pace. Our asset size is also growing at a faster pace. And on top of that, we are a company which is expanding at a very faster pace, and we are not saturated. We have still more areas to venture into. So that keeps all the growth prospects opened up.
Move on to next question. From Vidit Gupta, is strategy to reduce dependency on gold loan or it will be our main focus area?
I again repeat the fact that number one, there is a lot of headroom for the gold loan industry and gold loan players to play in, and we would be focused in gold loan at least for next another 3-4 years.
Move on to next question from Robert. What is the breakup of AUM from online and offline setup?
So we have around 800 crore online and offline setup.
Yeah.
So we run something called a hybrid gold loan, more than an online setup. So a hybrid gold loan is an online offline mixture. So what happens is that we have a traction of around 20% of our customers through our hybrid gold loan platform.
Okay. Move on to next question from Bumper Robert. Are there any green shoe option in the issue?
Yes, it's the base issue is of 100 crores and the green shoe option is 100 crores.
Okay. Move on to next question from Asha Shah. What is the breakup between number of customers in terms of offline and online of your two IK customers?
Again, I would like to reiterate my statement that more than online customers, we call them hybrid customers, where they have an option of interacting physically too in the mixture of their online interaction. So I've told you the hybrid traction has been done nearly by 20% of our customers.
Okay. Next question is from Kojin. How much time do you take to sell gold once a customer defaults?
So once a customer default means we can do an auction only after 90 days of DPD. That is means the the maturity of the account. And for that, their RBI has prescribed certain procedures, certain notice protocols to be followed in notifying the customer. And later on, the gold has to be moved to a single point in a particular taluk. And again, an auction advertisement has to be done on a daily circulation. And post to that, an auction has to be done with an RBI certified person to witness the auction, or it has to be a very transparent online auction. So all these protocols has to be followed in order to have the gold to be auctioned.
Okay.
So the process will start from the 90-day DPD onwards.
One more question from Robert. How do you see number of branch for next 3 to 5 years?
We see us crossing around near to 550, 600 plus branches during that time.
One more question from Robert. Also, the loan book size.
So we target to be around 4,000 crore plus.
Next
Three
question.
in 3 years. In 3 years, I think our target is 5,000 crore. 2026, 27, we have a 5,000 crore target. Sorry.
Okay. Uh, Thanks and all the best. I think we have covered majority of questions, so we'll conclude this meeting. Thank you, Umeshji, Vivekji, for giving insights about the company and issue to the investors community, and thank you all the investors who participate for the roadshow. Thank you once again.
Thank you.
Thank you. Um, on behalf of Indel Money and Vibro Financial Services Merchant Bankers, we thank you for coming for this presentation. And in case you have any further queries, you may please email to us or to the company, and we're happy to answer those queries. As far as the issue is concerned, the issue of the NCD public issue has already begun today, and it is going to end on 12th February. And we look forward to your wholehearted support for this issue. Thank you.
Thank you once again.